heard the sound, and now it's time for our last segment, Restaurant Reality, where we go in depth about topics no one wants to talk about. We'll provide our listeners with first-hand accounts on buying and selling restaurants and everything in between, such as trends, operation, employee education, and much more.
Hey, Eric, the reality of owning a restaurant, as we heard today, is that there's so many legal considerations. This is not a do-it-yourself thing. It's important to have a legal expert working for you, and as the practices have become more and more specialized, I really like what our guest had to say, that it's all right to use a generalist and to seek your own knowledge down that specialized path, because that's somebody that's going to be in your corner, and they'll let you know when you need to bring someone else in.
Correct. I mean, it was very refreshing to hear that, hey, come and see me, but one thing that also was really clear is like, go do your homework, educate yourself, go online. There's so many resources now available for you, whether it's liquor license handling of IDs and things like that. You can get a document online, you can look at some research or some documents from some of your friends in the business, and then look at this, and then you can say, hey, Mr. Attorney, look at this specific piece of it for a fraction of the cost, because we know it can be very expensive. I thought it was very refreshing, a very good idea to go and get something and then let them react to something instead of them crafting something from ground zero.
And since this is the reality segment, I also just want to interject some specific examples we've had with when we run into legal issues, and those legal issues are always a stumbling block that could potentially keep the deal from closing. And, our guests referred to this again and again. We are the people that remove those stumbling blocks and ultimately get it to the table. But here's an example. We are working on a current deal where there's 5 partners in a corporation, and the buyer wants everyone to sign a personal non-compete as part of the sale. Well, that means that individual would not go out and compete after the sale is concluded. And they have one partner who's a very minority shareholder. He has less than 15% ownership, and he refuses to sign the non-compete. So we've got a nearly $1 million transaction at risk. So the reality is, if you decide to put your restaurant on the market, because we talked a lot about buyers today, but sellers need to be aware of this too. If you're going to put your business on the market, have a meeting with all those shareholders, put issues like this in the form of a corporate resolution, and then have your restaurant broker take a look at it and have everyone agree. So we're not trying to solve those issues on the back end.
Yeah, good point. As far as the seller goes too, you should be aware that if you have liens, spend a few $100, do a lien search on your company, on yourself, so there's no issues. More likely, lien search are not deal killers, but sometimes buyers may get nervous. If you're hiding something, what else are you hiding? And they get nervous and they can try to renegotiate the deal at the closing table. So make sure that you are looking at everything, get your house in order before you put it on the market. It's no different than we talk about residential real estate today. When the realtor comes and say, hey, you're going to put your house on the market, every morning you got to vacuum, you got to make your bed, you got to keep the dogs away from the couches. It's the same thing when you sell a restaurant. You need to look at that, and then you have a smooth transaction, and you will get top dollar, right?
That's exactly right. And we talked a bit about insurance, and we talked a bit about some of the opportunities where you actually could run into a lawsuit. Eric, you had an interesting situation with a client a few years back in this regard.
Yeah, that was very interesting. We're talking about multidiscipline and everything. This relates to labor law. We had a client that wasn't open yet. They had an open house for hiring staff, and a gentleman came to apply for a server, and the manager of the restaurant that was doing the interviewing at that time said, we have a no facial hair policy. Would you be okay that you would have to remove your facial hair in order to work here? He says, well, thank you very much, and I'll give it some thoughts. 3 days later, the restaurant company, got sued by this individual because it was an infringement on his religious belief. And believe it or not, even if they didn't offer him a job because of the fact that they asked him to do that, they had to settle for several thousands of dollars, and that was upon the recommendation of their insurance company. So it would have been a good thing to have some sort of employment policy in place, maybe review by an attorney before they do that, because now they had to pay a lot more. I mean, Grady mentioned something that it could be in the $20,000 range, but these guys had to pay more than that just to settle that one incident. So now looking back, if you had to get something in front of an attorney that you picked up from the internet or from another company and spend $7,000, $8,000 to get a proper policy, you could have avoided this claim.
I think we could go on and on about these examples forever, because believe me, we've seen it all happen before and after the sale, and that's what happens when you sell sell lots and lots of restaurants, and we talked today about high risk type things as we reviewed the discussion about restaurants. But the opposite side of the coin is that they're also high reward. I mean, there's a lot of businesses out there with six-figure earnings, and one topic we did spend time on is owner financing, because that's a model that really fits the reality of the restaurant business. I liked what Grady said. What we like to tell people as a seller is that if you're willing to finance, you're putting skin in the game. You're telling that buyer, believe in me, it's going to not only give you a salary, but you're going to be able to pay me off at the same time, and it's a good way to gain a foothold in the business. And we have several things on the WeSellRestaurants.com website that fit that model today.
Yeah. And also one more point to consider if you're a seller about seller financing is sometimes if you have a large lump sum of money coming to you, of course check with your accountant, but it could be some huge tax issues versus getting some money for 2 or 3 years down the road. You may be limiting your tax issues on that. So there could be some advantages for you as well there to, at the end, to make more money than you would otherwise. Speaking of listings, Robin, with owner financing, I have a phenomenal in the Atlanta metro area, high volume restaurant bar that is netting to an owner close to $200,000 a year. And the owners believe in that place so much. It's well established, 6-7 years in business. They will actually finance half of it. The price, $449,000. You come up with $225,000 down on a place that can run an owner-operator 7 days a week, making almost $2 million a year in gross sales for $225,000 down, $225,000 financing. That is a very strong return on your investment, and somebody to get that kind of money for $200,000, you can even ask a bank to do this for you, Robin.
That is a really great opportunity, and I'll tell you what, I'll see that listing and raise you one, because I have a listing on the south side of town. It's only a 6-day-a-week business that operates breakfast and lunch. Their earnings are also in six figures, and here's the deal. They're listed at half that number, $200,000, and they have 50% owner financing. So those of you listening may not know, but this fellow is my husband, so we compete daily on who's selling the most businesses. I think you should take me up on this one. It's a simple, classic American menu, and it appeals to the built-in crowd in the area. You got something else?
Well, Robin, if you sell yours first, I'll buy you dinner, and if I sell mine first, you buy me dinner at my favorite restaurants, which still remain unnamed at this time for the purpose of the show.
Well, we can't leave out our friends in Colorado who are franchisees of the We Sell Restaurants brand. They have a strong opportunity, and I tell you what, if you want to live somewhere fantastic, try the Rocky Mountains. Our broker there has a restaurant that's netting six figures. His sales are close to $1 million. I mean, this is where you ski in, you ski out, you go to work every day. I don't know what their life would have. And the owner will also offer financing on this one. So if John sells his first, I guess that we owe him them.
Yes, but that'd be okay, Robin. To have dinner on the mountaintop in Colorado, I think I'd be more than happy to pick up the tab.
All right. I think that's just about going to do it for the Restaurant Brokers this week. This is Eric and Robin Gagnon. We're the Restaurant Brokers. Our show has 3 segments each week, so we've just ended our restaurant reality. Remember, We Sell Restaurants operates the largest restaurant brokerage company in the nation based on the number of listings out there, the transaction count, and volume. We are franchising nationwide and have offices in Florida, Colorado, South Carolina, Tennessee, and Georgia. Don't forget to visit us online for all of our listings, information, and a copy of today's show. That's at WeSellRestaurants.com. I'm Robin Gagnon. We'll see you next week.